Good afternoon, and welcome to the NAMA Connectiv webinar excuse me, where we will look at the three issues driving the ad space: AgRisk, AgPolitics, and AgTech. I'm Willie Vode, Executive Director of Content and User Engagement for Penton Agriculture, and I'm joined today by three great speakers who will delve into their respective topics for what I know will be a lively hour. We'll go in the order of the title, starting with AgRisk, transitioning to AgPolitics, and wrapping up with AgTech. And during the webinar, you will be able to post questions in the comment area, which you can see from the lower left of your screen, and we'll get to as many of those questions as we can during our Q&A period after our three speakers have finished. Don't wait to ask questions. Go ahead and type them in, and we'll get to them when the Q&A period begins. First up this afternoon, we'll have Bryce Knorr, Senior Grain Analyst for Farm Futures, who will offer insight into what's moving the markets with a look at production, price, financial, institutional, and personal risks. He will also offer a preview of the potential impact from tomorrow's USDA report. Next will be Chris Clayton, Ag Policy Editor for DTN, the Progressive Farmer, who analyzes Washington policies governing agriculture and agribusiness. He will look at the debate around the upcoming Farm Bill and the impact of commodity programs, crop insurance, and conservation. Other hot topics include renegotiation of NAFTA, the health care bill, and tax reform efforts. And to wrap up today's talks, Susan Skiles-Luke, editor of Farm Journal and editorial director of Farm Journal Media, will cover the excitement and innovation going on in the ag technology space. She'll offer a look at some of the most innovative on-farm technologies just around the corner, farmer adoption or lack of it, key challenges, and the role of investors. So let's get started. Bryce, you have the floor.
Thank you, Willie. I've hopefully unmuted my microphone. Could you confirm that everyone can hear me, please?
Yes, I can hear you. You're good.
All right. Well, so far, so good. Right. It's an interesting time for the grain market, both in the short term and long term. We've got USDA reports coming out tomorrow at 11 o'clock Central Time, and then we start talking about weather very seriously as we turn the corner into July. Now, tomorrow we get two reports. We get planted acres. This is USDA's first real estimate of what farmers actually put in the ground this spring. The last report was March 31st. That was their intentions. Don't look for huge changes, maybe a little more corn, probably 500,600,000 more soybean acres. Not a lot of changes to wheat. So overall, acreage probably won't be the story tomorrow. If we do get a surprise, it'll probably be in the grain stocks. So these can be fairly tricky for people to estimate ahead of time. And you can see from some of the ranges, there's some wide variations in what some of the folks are expecting. Particularly for corn and soybeans. Frankly, I don't know how some of these fellas make their estimates. You can see I'm fairly close to the average trade guess. Most of us kind of figure this the same way. But probably the biggest takeaway from this is that we can get some rather significant swings in prices for corn. These are the price moves in the week after the June 30th reports have come out. You see over the last decade some very large moves in the corn market. Soybeans also have seen some big swings the last few years, but we've also had periods where these reports really didn't produce a whole lot of excitement. And then for wheat, which can also follow the corn market. We've seen some pretty big moves here the last few years. Important to point out that for wheat, this June 1st report is the final carryout number for the 2016 crop marketing year, setting the beginning stocks that we start the 2017 marketing year with. Let's see. Try to get on the right slide here. Now, the corn stocks that we're going to be entering the last quarter of the marketing year with, the largest that we've seen since the 1980s farm crisis ended. So very burdensome stocks. maybe not quite as burdensome as just the raw number believes, because we're using corn much more intensely than we were 30 years ago. But still very burdensome supplies, much higher than we've seen the past few years. And that overhang is really weighing on the market. That's why corn really hasn't done too much lately. Soybeans, the same situation, but the highest in 10 years. Again, we're using a lot more soybeans, so maybe not quite as bad as this chart might indicate, but plenty of soybeans around. That's why soybeans have also been fairly restrained in their price movements, at least during the month of June. The wheat stocks in the same boat, the highest since the 1980s, burdensome supplies of wheat, and that's why it was fairly hard to get the wheat market going. The thing that really has us cooking, of course, is the big spring wheat rally up in Minneapolis. That we traded up a limit there for a time today. Now, we've been capturing farmer comments on our website in a feature we call Feedback from the Field, and showing these problems up in the northern plains, but also other parts of the Midwest as well. And that could start to become more prominent here as we get a better idea of just how these crops are faring. This is the vegetation index for the current week, and this shows the areas in the pink and red there, the areas that are stressed, and you can see that there is some stress up in the Dakotas, but also some significant stress starting to show up in Nebraska, Iowa, Illinois, as well as parts of the eastern Great Lakes, northern Indiana, Ohio. So we haven't talked too much about those areas here during the month of June, but I think we'll start focusing on them now, particularly as the pollination of the corn market approaches. The reason why the corn market hasn't been doing much is because the ratings have been decent. Now, I track the ratings a couple different ways. They basically show my projected yield if these ratings hold, 170 bushels per acre. That's basically a normal crop right now. Certainly not as good as last year when those ratings held at very high levels, according to my models, all throughout the growing season. So right now the market wondering how weather is going to affect these yields. We have good rains going to be moving through a lot of the Corn Belt outside of the Dakotas over the next week, but the temperature is going to start warming up, and the 2-week forecast kind of bouncing around back and forth, but looks like it will be hotter and perhaps drier in the western Corn Belt as well. Also tomorrow we're going to get the updated forecast for July, which may give us at least some indication of how the crops might fare. When you toss all this into a spreadsheet, my supply and demand table, I got two yields I'm using. One is at 170. That basically shows prices perhaps a little stronger than we've seen this year, so it's not a bad outlook. We rallied into the selling range target. However, if we chop that yield 164, which is kind of what the Vegetation Health Index is starting to hint at, we could have a room to run for a rally perhaps in the second half of the growing season or maybe after harvest. The soybean crop looking pretty good so far. The ratings project above 49 bushels per acre. So we're talking about plenty of soybeans potentially. I'm still using a trend yield 47.3, but even with that, you're talking to carry out 500 million bushels. So comfortable supply. We've moved into the selling range. So getting beans off the dime. Probably going to take some serious weather, more likely in August, if we don't get it in July. Spring wheat, that's the market where we've seen some significant action. The crop ratings continue to decline. This is basically a 15 to 20% of normal, and if the hot weather continues, we could chop this yield even more. Of course, spring wheat only part of the crop, but we're still talking a production cut here, significant compared to 2016. Going to be tightening carryout, it looks like, particularly if the export demand holds up, adding perhaps 75 cents to prices. Now, one thing to watch here is, particularly with this spring wheat market, the price range here at the bottom of the chart for Minneapolis, 675, basically 725. That's a 3 standard deviation move, or basically 99% plus of the expected price range. And we're trading currently over 650 on the, or 750 on the September contract. So starting to perhaps top out this spring wheat market. One thing we'll have to watch for here, particularly after the holiday. Spring wheat, this is yesterday's chart. Again, we're 50 cents higher than this, so we've blown through that technical objective. And a classic sign of a blow-off top, perhaps. The market's extremely overbought. We can stay overbought for a long time, but this real dramatic bull market, hyperbolic market, has been helping support not only the winter wheat, but also the corn and soybean markets as well. This green line here is where we're at for November futures. The red line is what happens in a year of normal production. Typically, if we can't rally now, we keep sliding into harvest, and it looks like that downturn is underway, again, unless we start seeing some pretty serious weather here over the next few weeks. Corn market, same situation in a normal year, that red line. We start breaking now as the pollination window approaches. We've already done that. So it's pretty much a do or die time for the corn market. Now, we do have some opportunities out there outside the perhaps the normal thought pattern. One is for winter wheat growers. They can use some large carries in winter wheat and the rally in spring wheat to start hedging their 2018 wheat that they'll be planting this fall. Had a big break last week in crude oil, presented a great buying opportunity for fall diesel. Propane prices are also fairly reasonable right now. Could be the last chance to buy before harvest. We've seen a significant sell-off in the fertilizer complex, particularly nitrogen, more production coming online in the U.S. Usually summer is the best time to lock in fertilizer prices. So I've been telling farmers to start beating the bushes with their dealers to lock some in. Well, thank you very much, and I'll turn the presentation now over to Chris.
Chris, you're going to need to unmute your line, sir. *7.
Chris, you're unmuted. You should be good to go. Chris, we still can't hear you. *7, please.
Bear with us, folks. So we're going to have this back online shortly so we can hear Chris. Matt, how about we change it up until Chris gets online and move over to Susan's slides and keep this this party rolling? Can we do that? Susan, are you ready to go? That'd be great. We can just kick over to your slides.
Can you hear me?
Yeah, we can hear you.
Okay,
So, Matt,
right.
why don't you move us over to Susan's slides if you can? There we go.
Sure.
Susan, take the floor, please.
All righty. If everyone can hear me, first of all, thanks for joining us, everybody. I am delighted to share the webinar stage with Bryce and Chris. Some really great and exciting things going on in agriculture today. I'm talking about the technology space. Lots of people on the call, and certainly Willie and other folks know about this space. And I'll just share what I see in it. It's a $3 trillion industry, agriculture is, and what's happening, as everybody knows, is we're seeing the evolution of the digital age come to the farm. It's an inexorable march that will not stop, in my opinion anyway. Lots of things going on, with hundreds of startups vying for attention and for money right now. No clear winners. We don't know yet who our Google or who our Amazon or who our Netflix will be. Folks are sort of waiting to see that. I just read a story, I think on TechCrunch, that said, a cute little subhead that said, it's the growing season, it's not harvest time. And I think that really sums up where we are in ag technology, lots of things happening. But if you think about the three driving forces going on that we're all aware of, obviously this population spike everyone's talking about by 2050 means we have to make more with less. We have less predictable weather patterns and the scarcity of resources and sort of the labor shortages that is predicting. Excuse me. And also, I think Chris was going to touch on it too. I just saw his slides. Consumers, as everybody know, are more and more interested in where their food comes from. And so all the questions of sustainability and traceability, those are forces that are driving the digital age to the farm as well. So what I see is, these factors are sort of teaming up to drive innovation, and where there's innovation, there's always, or often anyway, big investment, and that's what we're seeing in the ag tech space now. I'll start with the 30,000-foot level. I don't know if lots of folks here have read the Rabobank report, Jungle in the Jungle by Ken Zuckerberg. I think they do a good job of mapping out the four phases of agriculture, that the mechanization age, all those years ago changed the game. And we saw, I think, 140% productivity jump from 1910 to 1950 alone. A lot of that driven by the age of mechanization, starting with the horse-drawn seed drill all the way to motorized tractor. Second wave, we're talking about the advent of synthetic fertilizers and other chemical inputs, the green revolution. The third wave, and this is what sort of I learned too, is really precision agriculture started in the third wave with the mid-1990s advent of GMO seeds, and everybody knows what that brought on. And also GPS started at the beginning of 2000s. So this whole idea of doing more with less and of farming by the inch or by the centimeter instead of by the acre. That whole idea started back then, and what we're seeing now is an evolution of that idea, the progression of it to the Internet of Things. That's really what I see in digital farming as they talk about it. Really is taking the data that's coming off of so much of farming and making it into predictive intelligence that'll actually tell the farmer, okay, if you don't take this action on this day, you're going to get this weed in this spot. That's a gross oversimplification of it, but just the idea of taking raw data and making it into actionable insights that mimic the human brain in its decision making. That's the kind of evolution that we're looking at right now. Internet of Things, and this is a kind of a silly little diagram that I saw, but I like it because it sort of reminds us about all the different ways data is coming off of a farm, and this is hypothetical, obviously. But, when you think about just that sheer volume, where's it going and what's it doing for farmers? And I think it's really easy to get lost in the hundreds of products and services and technologies and claims and counterclaims that are out there. And you just think about this simple picture. A farmer who, let's say, is operating this operation on our screen right now. Think about all those, I don't know what you call them, terabits or something huge of data coming off of all of those different activities on the farm. we have to go somewhere. It has to be analyzed. It has to be subjected to algorithms. It has to be spat back out to the farmer in a way that he or she understands and in a way that is actionable and real on their own operation. Taking what I've learned, and which I think is so cool, and where we are now and sort of the cutting edge of this, is taking the data and really turning it into, like I just said, decisions that mimic the human brain. And that involves things like deep learning and neural networking and all sorts of stuff that will break your head. But the idea being that, we're not going to be the only ones, human beings, in making decisions, quote, for the farm. Farming is becoming much more of a management-based enterprise rather than sheer labor enterprise. And that's what we're looking at, the Internet of Things coming to the farm. I think I just read in the UK they're doing an experiment of trying to grow an entire barley field without any human intervention at all. I mean, that kind of stuff sort of sends shivers down my spine when I think about, farming and the role of farming and agriculture in our country. But it's the march of time, and things are going to be changing. I'm not going to show on my next slide. My video isn't working, but I want to take a minute and have you write down a company if you haven't heard of it before. Obviously, there's no ties to any companies that I'm mentioning up here, but I wanted to mention Blue River Technology and their See and Spray sprayer. It's sort of a media darling, so you've seen it written about on AgWeb, and you've seen it written about, in Inc. and Forbes and lots of places. But think about the whole idea of a sprayer that uses the same facial recognition technology that's behind Facebook. When you tag friends in pictures, and it's able to tell the difference in the plants that you spray. So the sprayer actually knows whether a plant that it passes is a weed or the crop plant, and it will spray only the weed. So it really is farming plant by plant, and again, it's relying on huge sets of data to be able to recognize these plants. And their claims, and this is being borne out in testing right now, is that it can cut input prices by up to 90%. That's 90%, because it's so selective in its inputs. And also, if you think about the possible effect on farmers having to buy traded, traits and new kinds of tolerances, this will make they claim that this kind of technology, will put a lot more money back into the pockets of farmers with a lot more selectivity. So again, Blue River Technology, it's just an example of a lot of the startups out there that are making waves, and it's all about farming by the plant and being ever more precise and limited with input. I'm just going to go right by my video here. So what do we have? We have a very crowded marketplace. If you guys haven't seen this wonderful infographic, I suggest you go to the Mixing Bowl and download it. They do a great job of trying to capture everybody that's out there, and I know this isn't even comprehensive. But, that's what you get when you have so much innovation going on. The marketplace, it's full of opportunities, it's full of new capabilities, but it's not always clear for farmers. So I guess I'd ask you, if you think about all of that data coming off those various points of the farm that we looked at a few seconds ago, consider that these companies, these startups right here that you're looking at, each address a different part of that challenge, right? Some of their offerings overlap, some are very different. It's kind of a hodgepodge. From the left to the right, you'll see that it starts with automation. Blue River Technology is up there in the upper left box under automation, but as it goes right, it goes into food service and supply chain technologies, because everybody knows when you think about it, the farm is just a part of the supply chain in that way. And what we're looking at is lighting up the entire supply chain and food manufacturing space with technology that enables this kind of traceability and real-time insight. So, I've also read today that, it's a good way to explain the confusion out there, I think, or the lack of clarity in that, you've got farm management software that tries to sort of be a one-stop shop for farmers. They're getting into the data analytics game. You've got, different kind of companies that are offering different kind of products and building on to what they have. And so the the questions are, what does Farmer's Edge do that, Farm Logs doesn't, or, what's the difference between, different big offerings that are out there or small. So it can be a confusing place, and there's lots of excitement on the sheet, and there's a lot of claims and counterclaims. So I guess we're kind of looking at to see who shakes out as the winner. We don't know that yet. In the investment sphere, we're seeing about $3 billion last year, more than $10 billion since 2014. And I just read that 2017 is on pace to be better than last year, actually like 3 times more than last year so far, with about $320 million invested. It's kind of funny because when you think about all of these dollars going into this space, and in a second we're going to look at adoption, and just remember, this is big venture capital money betting on this technology, betting that farmers will take it up. And they're seeing that happen or not happen to various degrees. Let's see. And I just read, actually, if you don't get Ag Funder, I suggest you read that website. It's really great in how it follows the space from an investor point of view. And Rob Leclerc at CEO is saying that, investors are becoming more aware of the challenges in distribution and adoption rates. And a lot of that is because a lot of people say, and I agree, that the Silicon Valley and the MIT, all the smart folks that, and the NASA scientists, all the smart folks that are developing this stuff, very few of them have ever stepped foot on a farm, right? And so when they talk about going out to try to sell this stuff to farmers, that's one question. Do they know how to sell to farmers? And number two, do they really know what the real world implications are of their technologies? And there's a lot of activity now, I would say, in the incubator space and accelerator space, lots of folks getting in on the act of trying to bring farmers into the testing loop and into, helping to drive innovation and helping to steer these companies. And in some cases, in the case of Ag Launch down in Memphis, they enable farmers to participate in some of the investment that's going on. So, I would say there's a gap between the $10 billion you see on the screen that's going into AgTech and the farmers that are, everyone's counting on to take up the technology. Here's a graph I saw at USDA on variable rate technology adoption, which I didn't realize variable rate had been around so long, but it has, even though it's just less than a quarter of farmers using it, it's saying on those crops. I was talking to Ken Zuckerberg just in preparation for this talk and asked him what he thinks the adoption rate is for farm management software. And he said that he believes it is in the, quote, low single digits at best. So even though we've seen $10 billion come into this segment in the last 3 or 4 years, you can see adoption rates have a long way to go. And from what I'm hearing from farmers, it really comes down to these things, these kinds of factors you see on your screen. Obviously, net farm income is a huge detriment to this. It's hard to get through a season, let alone invest in any technology. The ROI case hasn't fully been made. I was planting with a farmer in Mississippi a month or two ago, and this is a guy who is really tech savvy, and I was saying, Jimmy, why don't he does no prescriptive or no VRT technology at all. He doesn't use much of any technology. He has GPS on his combine or his planter, and that's it. And I said, why aren't you geared up? Why aren't you using a lot more technology since you know the benefits? And he just said, look, if it's not going to make me money this year, if it's not going to save me money or make me money this year, I don't have any reason to look at it. I'm just trying to get through this year. And that was sort of a wake-up call to me that these guys really have to make their case that it's worth the farmer dollar going into it. That's the case anytime, especially now. There's also huge issues out there that are being addressed but that are still around with compatibility. So the iron that you have in the field, the data coming off it, the data coming off of all those points in the farm diagram I just showed, they have to talk to each other. And they have to have the APIs in place to work with each other, all those huge data sets. And a lot of that infrastructure is not in place yet. And so you're seeing, organizations pop up in different places to try to spur some of that. But, somebody was saying, used an analogy with me that the iPhone didn't really or cell phones didn't really take off for the first, 10 years or so or more that they were really being produced. They took off later when, the infrastructure was in place and a lot of the first, years of innovation had been made. And then you saw, the hockey stick of scalability. And that's what a lot of folks think is going to happen in the ag tech space. When the infrastructure is there, when the compatibility issues are sorted out, when farmers actually can see and when these ROI cases have been proven and they actually have the money to spend, there might be a lot more scaling up. I want to mention just in closing here, and this is a bit of a shameless plug, but it has a point. We have a conference coming up at the end of the year called AgTech, and I was asking farmers a lot about what are the things that you want to know? Like, what is stumping you out there about technology? And by far, these topics right here were the ones that came up over and over again. And a lot of the consultants we spoke with and crop consultants and retailers, things like that, they were saying that a lot of basic information about how to prepare, collect, keep clean and keep usable your data, for instance, is a big thing. Again, the ROI question. For farmers who are sort of early adopters and who have been out there and using this technology for many, many years in the case of variable rate, now they have great yield maps they can use, but with all this additional imagery that's available and additional analytics that are piled on top of it, pretty soon you get a yield map and you don't know what to do with it. I was talking to an early adopter who actually had the idea for this topic, and he was saying just that. I've been doing variable rate for years. I've got the most complicated yield maps you could ever imagine, and sometimes I don't know how to make heads or tails of them. And this is a guy who is, like I said, a technological, someone who's very savvy in the space is having trouble. Again, understanding compatibility, running multiple prescriptions on a single acre. Farmers, I guess in closing, I'll add that, farmers are up for this, but they don't have the skills that go along with a lot of this technology yet, and they're looking for more of a proof case, an ROI case before they get out of the gate. But as soon as these companies are able to make these cases and show farmers, the value and the real benefit of their technology, it's just a matter of time before this kind of technology is coming to farms. Because if one farmer isn't interested or doesn't want to go down that path, they have to know that their neighbors are. Again, it's a matter of time and money over time. So I guess I will go back to Chris Clayton. Should I toss it over to you?
Can you hear me now?
Yes, we can. Thank you.
All right, take it away.
Apologize for the phone problem there. I'm in D.C. this week, and right now kind of taking a look at what's going on with the Farm Bill. We're still pretty much in hearing mode. The House Agriculture Committee has been holding hearings for quite some time. The Senate has been a lot slower, but the Senate had a hearing on conservation this morning, looking at some issues there. Just looking at this slide here, just to reflect a little bit, there are just so many various elements and pieces that go into the Farm Bill. And for every one of those pieces, there are a ton of interest groups focusing on them in different ways. They either want to get rid of a piece or they want to expand it. So it's increasingly everybody and their dog has got a little bit of investment in the Farm Bill. Why the push right now? Income obviously has been stated a couple times already. Our incomes are a lot lower for farmers over the last couple of years. Not everybody's in the same boat, but there are a lot of struggles out there right now. And the last Farm Bill, was passed really at the peak. You see that red arrow was where the Farm Bill was passed, 2014, and everything has kind of slid down since then. So, and they are already beginning to learn that they learned very quickly that the program, the agricultural risk coverage program that was created in the Farm Bill, the one that corn and soybean guys really jumped on, kind of worked on a sliding scale, and as prices have slid down, so has the protection level for ARC. So what are they talking about right now? Dairy is an issue. The program that was created in 2014 really hasn't functioned very well at all. It does not really, it was targeted mainly to help pay on feed expenses, and it really just has not been very effective for dairy farmers, so they're not signing up for it. Cotton farmers decided last time to step out of the Farm Bill, and what happened then was, they found themselves really shortchanged when it came to a protection program. A fix for cottonseed could be quite expensive. They're looking at, rather than protecting the actual cotton itself, creating a program for the cottonseed market. But that can be, again, $500 million to $1 billion a year, depending on where you set the value for that cotton. Part of the problems that you have with the ARC program is the diversity of payment, the range of payments that happens from county to county. That really upsets a lot of farmers. It's based upon county yields, so you've got to get a lot of farmers in your county to send in the yield information, or your numbers are off. There's already looking at a fix of maybe tying ARC to the crop insurance acreage and yield, because farmers are required to submit that information in. And then there's always right now the perennial debate on SNAP, which is going on even outside the context of the Farm Bill right now. A lot of other ideas being floated out there. Really, one of the big ones involves CRP particularly, and what happens to it. Everybody is a range of either keeping it where it is, increasing, expanding the acres, several million acres to cut back a little bit on production, changing CRP so that maybe allow more haying and grazing on it for the cattle, livestock producers. If you expand CRP and you keep it at an average payment level right now where it is, you're talking for every million acres, you're talking about $100 million or so. So that's something that really has to be factored into the situation. Then there are discussions right now, not so much in the ag committees, but among everybody else, of can you tie more conservation requirements to crop insurance as a way perhaps to mitigate and deal with some of these water quality issues, for instance. A lot of debate and cost when it comes to the science programs at USDA, and then there is the trade components, the MAP and FMD market access program, foreign market development program. Apologize for the acronym situation there, but because farm groups are trying to find more markets, they want to see those programs expanded. Excuse me, next slide there. We all know the president right now still needs to hire a lot of his team. There was just a letter from agricultural groups sent out this week saying, we really need to see some more people brought into USDA and confirmed. Right now, Sonny Perdue, the Ag Secretary, is the only Senate-confirmed person at USDA at the moment. In a situation where you might have, on average, at least 17 Senate-confirmed people at USDA, and then there are a whole treasure trove of other people who are appointed, and not much of that is happening. So that's a real problem. It's not just a USDA problem. It's a problem in a lot of agencies right now. If you do notice, however, these priorities that Trump has laid out for his administration, the Farm Bill is not something he's really talking about at all in this situation. So Farm Bill, in terms of the Trump administration's priorities, the Farm Bill really isn't high on those area. Another wild card, I think, is all of the other stuff out there right now. Of course, you've been hearing the debate going on about health care. All of these kind of things kind of suck the air out of so many of these other major bills, of course. How long will the health care debate continue on? Obviously, right now the Senate is kind of gridlocked over that situation, and so nothing else really moves or happens. Tax reform is what Republicans really want to get to, but they can't get the tax reform unless they get this health care bill dealt with. And tax reform has a lot of its own battles. It's a very complicated thing to do. The Treasury Secretary, I thought, was very optimistic when he said he thought tax reform could be done by the August break. It took the Reagan administration. The last time we had a big tax reform package was 1986. It took the Reagan administration, President Reagan and his team really started on that in 1984, and they finally got a bill in late 1986. So it took them 3 years of constant focus on this issue to finally get a tax reform package through. So it is not something that can easily be done. And my point is that it takes away from everything else. Another situation really that kind of comes into this is the budget that the president has proposed for agriculture. I was at a agriculture appropriations hearing yesterday, markup of the 2018 funding for USDA, and they basically ignored the president's proposal pretty much. They did make a few cuts to some programs, but a lot of the things that he put on the table were flat out ignored by the Appropriations Committee. Many of these other things that he's proposed are stuff that would have to happen in the Farm Bill. You can't make cuts to crop insurance unless you do it in the way he's proposing in the Farm Bill. Same kind of thing with the SNAP cuts. You can do that in a budget situation, and there's a lot of debate about that right now. The House Ag Committee chairman has been catching grief over the last few days from the Heritage Foundation over the fact that he has not proposed any major cuts to USDA programs that would help with the tax reform bill. And his argument, Chairman Conaway from Texas, his argument is that I'm willing to do something, but I want to do it in the context of a farm bill. If you make these cuts the way you're proposing, then you really limit my ability and the ability of my committee to make some changes in the farm legislation. So don't do this to us now. But groups such as Heritage Action, they're very conservative, and they've come down and really pushed hard on him yesterday on that situation. So this is the kind of dynamics going on here. The chairman has his own plan for how he wants to get a farm bill done, but outside forces are really pushing on it. And then the Trump administration proposing cuts that are way beyond what the committee has proposed. The last farm bill, for instance, basically cut spending by about $23 billion. The Trump administration proposed $240 billion, so 10 times the cuts that were put into the 2014 bill. So time is kind of ticking away at the idea of getting a farm bill done in 2018. It generally takes a couple of years to get a farm bill perfected to the point it's ready to go to the president. The House Ag Committee is looking ideally at getting their bill moved and advanced sometime, ideally later this year. But we've already seen, we know, the tax reform situation is going to be carrying into the fall. Healthcare is going to be carrying into the fall. So the potential of getting a farm bill to the floor sometime later this year, as long as these other major issues drag on, it really limits that ability. So this is kind of the dynamic that I think that it makes it difficult to think that they're going to be able to get a farm bill done in 2018 because the Senate has to do all the confirmation still. They're way behind schedule on a lot of that. And you have all these other big pieces of legislation that are continuing to drag on a lot longer than maybe anybody might have thought. That makes it a lot harder to get a farm bill advanced as well. So yes, in looking at some of the things that can be done, it is possible to get a farm bill, a tax reform bill, a health care bill, things like that, all done in a 2-year congressional term, but it's pretty rare. The last time you really saw a Congress and a president advance so many major pieces of legislation like that in a 2-year period was going back to the Reagan administration, 85 and 86. Of course, Reagan was wildly popular. Coming out of the 1984 election, he had like a 70% approval rating. He had a divided Congress, and he worked with both parties on that. So, Reagan had a lot of things going for him that President Trump at the moment really doesn't in such a hyper-partisan atmosphere that we're dealing with at the moment. So these things, I think, all weigh in against the Farm Bill. And then, of course, we're also talking outside, really, of legislation on a NAFTA renegotiation. Eventually, Congress has to weigh in on that. That, too, will potentially play into a Farm Bill, particularly if you make some changes in trade that would have to really require some changes in law. Whether you are making changes to sugar imports, making changes to fruit and vegetable imports, making changes to policy, pushing on dairy in Canada. Some of these things may require actual changes in the farm law to go along with what's happening with NAFTA talks as well. With that, again, apologize for the technology problems, and hopefully we've got some questions.
I don't have any up there yet, so I want to remind everybody that you can put your questions in the comment area on the lower left side of your screen. Just enter them in, and we'll ask as we go forward. I had a question for Bryce, I guess, to keep this moving a little bit. Bryce, if you're still on. You talked a lot about markets. We've seen the wheat market go crazy, blow off the top. Are we seeing more market volatility right now than we have historically in the grain trade?
Well, can you hear me? I'll
Yep,
ask that
here.
question first. Oh, okay.
Yep.
We're seeing some seasonal volatility in wheat and corn. The soybean volatility, at least as measured by the options market, extremely low, trading 20% or less. So a similar situation to where we've seen low volatility in things like the stock market, where traders kind of ignoring risk. In the case of soybeans, I think the market just doesn't want to pay a lot for options or insurance on prices because they don't see a lot of upside, maybe not a whole lot of downside either. The market just kind of looks flat right now, looks well supplied, and it needs to find out how big the crop here is in the U.S., what growers in South America are going to do. It looks like they're going to plant more soybeans, particularly in Brazil. They have an advantageous currency relationship with the U.S. dollar. And then finally, what's happening with the Chinese economy. The Chinese seem to be keeping their growth on track, trying to solve myriad problems in their economy, the environment, you name it. But so far, they've managed to thread the needle and keep from slowing growth, which a lot of people had feared.
Well, that's good news, and volatility is nice for farmers, though. That does give you pricing opportunities, so we'll just have to wait on soybeans. Susan, I wanted to circle back to you on something. You showed the lovely IoT graphic, which every one of us has seen, and it really tells a good story. But the baseline on IoT for me, and I wanted to know your thoughts on this, is infrastructure, and that would be broadband infrastructure. And I wonder if that's what's holding back this mixing bowl mashup of companies, because it's all great and good. I can get this thing to work when I'm in the Silicon Valley or working in Omaha, but once I get outside, far a little out of Omaha, I got no internet. How does this kind of stuff going to work for us?
Well, first of all, can you hear me? I didn't unmute.
Yep,
Can
you're
you
up.
hear me?
You're up.
Okay. Well, Willie, I think that's just part of the puzzle, and the broadband stuff in terms of the detail of it. You might know more about that than I do at this point. I don't know. I keep hearing infrastructure, and I think that's definitely a part of it. But it's also the skills that go toward understanding what the different pieces of infrastructure are and sort of the literacy of it all and the use case. I guess I would bat it back to you and what you think that is in. And I don't mean to be facetious. I'm just curious of what you think the role is.
Well, my perspective on it is that is an issue. I mean, but you're right. There's an educational infrastructure, and then there's also a physical infrastructure problem. I've had, as you have talked to people in the industry, I have as well, and no matter what kind of talk you have, that comes up. And we're not going to live on a Verizon 4G network. That's expensive.
Right.
So hopefully USDA, I know that the Trump administration has already started this conversation, and the other opportunity is that the opportunity there is that the money's starting to go in again. Rural development spent a lot of money in the last few years. It's just that last mile problem that we're going to get to. So I got a message about Q&A tab, and I'm still looking for the Q&A tab. I don't have it on my screen, Matt, so I don't know what you mean. So anyway, he'll send me some questions. I have a question for Chris, and it goes to, and then we'll get to the Q&A that's here once I figure that out. Chris, Barry Flinchbaugh says we'll always have a farm bill. The 2014 Farm Bill was an ugly mess to get through based on all the different partisan bickering. And also when I say partisan, I'm including this crop against that crop, this livestock group against, that kind of thing. Does this look even worse than 2014?
Not at the moment. And the ag groups have really tried to work behind the scenes, meeting with each other, talking about these issues, to try to avoid that kind of problem that you had with 2014. But it really kind of comes down to, what happens, what's the mood of Congress like when the bill finally gets to the floor. What happened in 2014, actually what happened in 2013 was the House decided to split the bill, and they tried to do that on the floor rather than in committee. The committee told them, you take the nutrition programs and SNAP, and you take that away from the other parts of the bill, it's not going to pass, and that's exactly what happened. But you have all of these different caucuses, these different factions in Congress that try to push these kind of things. And that time around, it was the Freedom Caucus. They're still very strong and very influential, and you also have a lot of these guys now. Some of the people that were involved in that are now people in the administration. So they're going to want to try to push a more conservative bill. And the reality is you can't pass a farm bill that's not bipartisan. You've got to have Democrats involved. You've got to have Republicans, each side wanting something a little bit different. And so it's really going to be up to Chairman Conaway to navigate in the House side to try to get something that passes. Now, the one flip side is, let's say a year from now, Congress in Washington is so broken that it doesn't look like anything can happen. You might actually get the Farm Bill passed sometime in late 2018, just to show that they can work together on something. That has happened before as well, right?
Yep,
so,
that has happened. I do have another question, Chris. It is for you, and the question is, are all the unfilled positions at USDA because Trump isn't nominating people, or is it because the Democrats simply won't confirm anyone to obstruct Trump in an effort to obstruct Trump?
Nobody has been nominated.
Yeah, that's what I thought.
We don't have a deputy secretary nominated. We don't have any undersecretaries nominated. There's 7 of those positions. And then you have other deputies that go along and agency heads, and none of them have been nominated. The problem comes back to the White House office that does the background checks, that does all of these sort of things. They seem to be having a real problem moving through and getting candidates. It isn't just a USDA problem. There was a story out here earlier this week of Secretary of State Tillerson blowing up on White House staff because he can't get any of his people. He keeps putting up names, and the White House keeps rejecting them. So it's, you can't say the Democrats are obstructing it if you haven't got anybody out there for them to even question. So this is not a problem with Congress right now. This is a problem within the White House and the administration.
Interesting. Well, we're wrapping up our hour. We're coming up on the 2:00 hour. So we don't have any other questions that have come in. That was a good one there, though. I want to thank our presenters today for the time and your perspective on AgRisk, AgPolitics, and AgTech. There's a lot going on in all three spaces, and it always, as it seems this year, everything seems a little more active than usual. So again, thanks to Bryce Knorr, Chris Clayton, and Susan Skiles-Luke for joining us. I'm Willie Vogt. The recording of this talk will be available and be sent out as a link from NAMA Connectiv tomorrow. So if you want to share this with other folks in your teams, you're more than welcome to. I'm Willie Vogt, and I thank you for joining us today. And thank you, Chris, Bryce, and Susan.